Hi guys, my name's Dr. Thaon Simms and welcome back to another episode of the Limitless Podcast. Joining us as always is your co-host, Dr. Matthew Preston. Hail up the people, Matthew.
Hey guys, what's good?
And as you guys can see, we have a special guest today. The last time Chris Williams actually sat in this chair, he was CEO of $1 billion Caribbean investment house. Since then he's walked away from that title, launched a real estate platform designed to let everyday people own a piece of commercial property. He's taken on commercialization or residential property. He's taken on commercialization of Jamaican basketball and started channeling diaspora money back into the island through a venture called SparkFDI. I mean, this isn't the same conversation we had last time. Last time we spoke about who Chris is. Today we're gonna find out who he's becoming. Chris, welcome back to the show.
Yeah, man. Thank you. Thank you. Big up. That's a mouthful.
Quite,
Yeah,
man.
so,
But you've been
yeah,
doing a lot.
You've been busy.
yeah. Well, I try to rebirth, Sometimes, when you hit that, 30-year in the business mark, you kind of you either have to step out or you have to step back and, reinvent. And so, having had a chat with my family and my two boys especially, they were like, boy, you're definitely too energetic to retire. So, wheel and come again and
Yeah.
do something different.
Oh wow, that's brilliant. Okay,
Yeah,
all
but
right.
just one quick correction. Oh, and I guess we'll get into it, but Spark dovetailed into different.
Oh.
Yeah, so I just do different, and I'll give you the story. So when I went, when I sat with my boys and Michelle and so on, I said, "Yo, what are we gonna do different?" We said, we do real estate and we do FDI. FDI meaning foreign direct investment. In touring the diaspora, did Miami, did Atlanta, did New York, did Washington, did London. I even gave a speech at Cambridge Union in Cambridge. I did a number of engagements around the diaspora, and in those engagements, I'd grill them and say, what investment asset class are you most interested in? And the asset class that they were most interested in was real estate. So, on the flight back from London, I messaged Gary and said, "Yo, it's real estate." You know, uh, so we just killed Spark, rolled the business model of FDI into different because the main FDI that was demanded was real estate. So
That makes sense.
yeah. So
What does FDI stand for?
Foreign direct investment. So that's essentially getting anybody outside of Jamaica to invest in Jamaica. So when you're building an investment business, you look at local direct investment and foreign direct investment. Those are your two target markets. And so the foreign direct investment typically comes from the diaspora or the hoteliers. Those are the two top markets. So, the Spanish, etc., they're heavy investors that are non-diaspora. and then we see that in the Iberia Star and Rio and all those hotels. But then the diaspora are also heavy investors from foreign, and they, of course, they buy groceries, they buy chance ticket, they buy hotel room, they buy party tickets, they buy apartments, they buy groceries, everything. And so they're
Yeah.
huge, consumers of assets in the island. And then, of course, you have the locals that are also huge consumers of investment assets around the island. So we just said, all right, let's just lock in and just look at real estate. And so so just everything. So I'm just different and basketball.
And basketball. All right. I
Yeah.
mean, we're definitely gonna get into the basketball at some point, but I, I mean, we were talking about the diaspora a while ago, and Preston and I, we mainly, the investment vehicle we look at is stocks, and on this channel, a lot of it is about stocks, and we realized that there might be a difficulty or an apprehension for a lot of people in the diaspora to actually invest in Jamaica. So for you, what do you see as the biggest barrier stopping diaspora money from flowing into Jamaica? Like, is it trust? Is it regulation, currency risk, or something else? I don't know.
It's SSL, bro. It's SSL.
That set us back.
Yeah, man.
Yeah.
SSL has set us back 20 years. It's been
Wow.
a massive blow to confidence and trust. So um you know the 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 key thing for the diaspora is being able to protect their investment, and um and that the and why that is the key thing is because they've been burnt so often, right? So um when you drill into that, uh the focus for us and for everybody that's seeking to attract the diaspora, the focus just has to continuously be transparency and 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 confidence. That's what we have to say. We have to continuously, you know, um, outline to them who is involved, and the fact that we have, you know, um, a strong reputation and history of managing money and managing investments, and and just keep doing things right, and building back confidence, because so it doesn't you don't even get into the analysis of the stock or the analysis of property, you know or the analysis of the bond. We don't even reach just again. That was just like, I want to number there. I mean, it's in them name.
Yeah, exactly.
The minute, you have even one S, in your name, you're in
hmm
trouble. So,
Wow.
yeah, man, it's been terrible. It's been terrible.
Uphill battle.
Yeah, man, it's not even a battle. Some of the doors are just closed.
Yeah.
They're just not interested in having a conversation, because of, and of course, having, Houston as the face of that is just, the worst, because
Yeah.
everybody it's just front and center, you know. Um, so we, we have to live with it because we can't change it. So we just have to keep, doing presentations, doing, our IG posts, doing podcasts like this, just continuing to, to educate and inform and build back the trust and confidence in the, in the landscape. As you both know, the landscape is extremely solid, extremely solid. We are, we're by far the leaders in the Caribbean, and I personally don't see anything to be ashamed of in terms of what we have achieved as a capital market. Uh, However, they don't live here. You know what I'm saying? So
Yeah.
just being away and just not, running into people in the supermarket and at champs or football, just that socialization and the ability to get comfortable, that's missing, and so as a result, it's a battle. But you know, um, at the end of the day, the diaspora is so huge, you cannot ignore that. So we have to try to fight that battle, and that's what we're doing.
Perfect. Well, I mean, you spoke about the landscape, and I was even thinking about now the business, different. Walk me through different properties. Is it like I'm someone who has never invested in anything? What is it,
Right.
and what problem do you solve?
Right. Brilliant. I love that. Yeah, man. So that's exactly how I built out the business model. Just got an opportunity to um retire, and that opportunity is rare, and I got it at a fairly um good age. Not young, but definitely not old. And so I said, all right, let me use the experience of 30 plus years investment and just try to find the gap, and what's the problem and how do I solve. So the first thing was looking at the various asset classes. What is the asset class that has the um, most manageable volatility? Because I just felt that where we are now, uh, what we wanted to manage was volatility, and so it's not so much trying to hit a home run, is more trying to not get out, and so I felt that the investors wanted an asset that they could better and more comfortably manage. And so, of course, real estate has one of the lowest standard deviation, across all asset classes. So I said, all right, let's lock in on real estate. And then, of course, coming out of proven the last 10 years of proven, or maybe not 10, maybe 7 years, our real estate strategy really exploded. Uh, you know, and we did very well. And I still doing very well. So that was also fresh in my mind. So having both of those, I said, let's lock in on real estate. When I locked in on real estate as an investment opportunity, I noticed two things. One was the real estate component evolves wider than the investment in real estate.
Your cameras. Okay.
Okay, sorry. Yeah. You can't have a conversation around real estate without comments coming into the post around the shelter component of real estate. So unlike the other asset classes, stocks and bonds, private equity, private capital, etc., the real estate has a shelter problem, a usage. So you pick up the phone and you want to talk to somebody about investing in real estate. And them say, boy, I can't, real estate, I want somewhere to live. I don't want to talk about investing in real estate. I want an affordable apartment or an affordable house, So that was the first thing, which we weren't banking on. We were just trying to build investment opportunities, and not build in the technical sense, but meaning um, identify investment opportunities.
Hmm. So you
And
guys are on the
so,
construction.
hold on. I still get to that, but to first, you just wanted to see where the investment opportunities were. Um, no, so that was one. But then, as I said, you're talking to people about investing in real estate for their retirement, etc., and they won't allow you to leave the room without talking about the fact that either themselves or their children, or their nieces or nephews or their friend or coworker can't find somewhere affordable to live. So we couldn't ignore that second part. So we walked away from the conversation and we said, all right, we have to try find um, solutions for consumption. So shelter, just people who want a property, not for a return, but for somewhere to lay their eggs, or their kids lay their eggs, etc. And then the second thing that we saw, the second need was, yes, people wanted to invest in real estate and have a rental property, etc. So
Mm-hmm.
we walked from that. So we said, all right. So we came back to the war room, lab. And we said, all right, what can we create to satisfy those two needs? On the investment property side, what we recognize is that for the large part, we have not yet significantly unitized real estate. It's still, for investment purposes, it's still primarily being sold in real title, as opposed to stocks and bonds. It's extremely unitized. So in the case of stocks, nobody's calling you up and saying, "Do you want to buy Grace Kennedy, the entire company?" You know,
Mm-hmm.
they're calling you up and saying, "Do you want to buy one millionth of Grace Kennedy, share?" And it's $50. You understand me? So because of the significant unitization of stocks and bonds, the consumption of those two asset classes exploded over the last 20 years. And you guys, as kids, grew up being able to consider buying into Grace Kennedy. You know, um, when I was your age, we didn't, we weren't as, the market wasn't as, developed. And so, we never saw the, even though it was already unitized, we never saw that significant amount of companies listed on the market that there, and the popularity of it. So the access, to the business plan of Grace Kennedy was next to impossible. So that, of course, as I said, that exploded capital into stocks. So we were like, all right, let's unitize real estate so that you guys can own a plaza. You obviously can't buy the plaza, but you can buy a share in the plaza, just like how you can buy a share in Proven, Sagicor, NCE, Scotia, Grayston, yada, yada, yada. You should also have the ability to buy a share in Mall Plaza, in, the plaza that holds KFC in Junction, in, this hospital, in a data center, in a BPO. You know what I'm saying? So
Yeah.
so the we said, and the instrument that has kind of owned that unitization process is the REIT. It's still a share in
Wait,
all.
what is a REIT?
Right. So I'm going to get into it, but I'm just saying the terminology that the world uses to describe investing in a property is they pick up the phone and in Spain, two friends talking, they're going to say, "Yo, are you going to buy shares in MetLife REIT?" So that's just the terminology. Just like how you would, in Jamaica, when you say shares, you automatically think of investing in a company, and bonds that is investing in a loan. You understand what I'm saying? So I just want, cause you have to understand the terminology. So the terminology for you to invest in a real estate asset is a REIT, right? And the definition of the acronym REIT. So and REIT is REIT, right? That's the that's the spelling for the pronunciation REIT. And what it really is real estate investment trust, right? No, the truth is it has evolved significantly from being a trust across various jurisdictions. No, today it's primarily just a company. They just use the Companies Act, and so the property is bought by a REIT company, and you as an individual, you simply buy a share in that company, and the company owns the property. So if the property is I keep using Mall Plaza or New Kingston Shopping Center. The property is New Kingston Shopping Center, and New Kingston Shopping Center is owned by New Kingston Shopping Center REIT Limited, and you buy shares for $1,000 per share in New Kingston Shopping Center REIT Limited. Right? And that company, that REIT company, is listed in the same way, either on a special market on the stock exchange, which could be a property market, or it's listed on the main market. Me personally, I prefer it to be listed on the property market as opposed to the main market.
Why?
And the reason is because you want the reporting requirements to be slightly different. When you're reporting on a property, what you really want to see, instead of a financial statement with unrealized value and this, that, and all kinds of IFRS requirements, what you really want to see on a rental property is how much rent you're collecting and what is the cap rate on that property. That's the main thing. And you get that typically through a property valuation, you know, as opposed to in the case of a company, you get the performance of the company typically through an audited financial statement. In the case of a property, what you really want to file with the stock exchange is a valuation, either an annual or a, biannual valuation, which, done by a licensed valuator, and that typically captures all the critical information for an investor. So, that would be my recommendation to the stock exchange. We have written to them, and we've got, so we're going to meet with Livingston, who's a good friend of mine, because we've asked him to consider a property market for us to list the various REITs that we're bringing to the market, and to have a separate reporting requirement. So you get more of a property manager report, as opposed to, a typical, financial statement report which a company does. So we'll see, how that evolves. But the key that we looked at is unitizing access to real estate, so that, it would broaden the investor pool. So instead of, just the 1% of Jamaica, have, the entire, 300,000-400,000 people that are exposed to the capital market. Have all of those people being able to buy shares in a REIT, and therefore to access specific investment properties, which, hey, could even be a toll road. It could be a toll road, it could be a beach club, it could be just land, and like I said, it could be a mall, could be a hotel, there's several, properties that we would now be able to access and to build our portfolios of. So that's our goal. So that was the first step. Let's develop the REIT market and just explode that. And so that's what we're doing. That's step one. The second step was to go back to the shelter problem, and also to go back to the SSL, right? So if you go back to the shelter problem and you go back to the SSL problem, the solution for both of those problems are properties, right? Because the shelter person is not interested in buying a REIT, because he can't put his bedroom in a REIT, owning a share in, a mall plaza limited does not help him, because he wants somewhere to, or her wants somewhere to sleep, and to hang out and have dinner and breakfast and so on. They want an apartment. And then the diaspora, because of the SSL experience, they prefer to hold on to a title. They don't necessarily want to buy into a REIT, because that just sound, too different, to shares, and take you back to the investment company, and them no want talk to no investment company. So they just want to buy the property and get a title, and they can put the title under the mattress, up in New York, and them don't have, them don't care about Chris and Gary. Some of them just want to buy a title. So buy a property. And so we said, all right, let's be brokers. That's, so one we sell REIT, and two, we sell property on behalf of vendors. whether the vendor is, you know, a lady that just wants to downsize, um, a developer who has built some apartments and, you know, want to sell them, etc. So we are a realtor and a REIT manager. So we stepped away from being a developer. So we're not, you know, we don't, you know, we're not doing any construction. We're a realtor. We got our real estate license in January, and you know, and we're now hiring our agents and, you know, building out our real estate sales business, and we're also a REIT manager. So we put REITs together in conjunction with VM Wells, and we offer them through private placements or through IPOs. So those are that's it. That's what we do. So and the realtor business, the reason we think we can be competitive in that business, and it's an extremely crowded business, Frank. But the reason that we think is, one, we're going to, you know, put on our personal experience. So we're going to say, nah, this price just not practical. So even if a listing comes to us, if we don't think that these are good terms, we're not selling. So when we call you, the properties that we're recommending are properties that we think are good buys. Whether it's a good buy for you to live in as a local, or it's a good buy for you in the diaspora, for you to, you know, have when you're done with Trump and you're free the ice, both ice the you know the porter, or ice the snow. Anyway you turn, you go free the ice, so
Yeah.
but they want somebody that they feel has experience and has exposure. So we're not just listing everything and pushing it out there. We go through everything on the MLS, everybody that calls us, and if we don't think it's a good deal for our clients, our people that put trust in us, we're saying no, we're not taking the listing. When we take listing and we call you up in Brooklyn or in Toronto or in London or right here in New Kingston, I want you to be comfortable that we did the due diligence and we stress tested it and we recommend this for you to buy. So yeah, so that's it. Yeah.
What made you guys choose Victoria Mutual over the other brokers?
We're not locked into them forever. It was just relationship. The main guy there on the capital market side, Dwight, he and I go back, we worked at NCT together and so on. So we're kind of, friends. So we just stuck with him. But we're meeting with Sajipur this week, this Friday. So, other brokers are coming to us to handle our next REIT. We have one REIT in the market right now, which is a property in the Cayman Islands. 11 townhomes, all rented to doctors and nurses, etc. Which so it's what we call workforce housing, and they're individually strata and in a great location right in Georgetown. No major traffic, to get into the city to work. Right beside the hospital, so they can literally walk across the road, to the hospital where they work. And as I said, it's fully tenanted and everything. So that's the first REIT that VM is the broker for us. So that we're doing it as a private placement. And then we also are looking at another commercial property here in Kingston that we're getting at a good price, and it's tenanted and everything, great location. So we may list that one with Sagicor. So no, we're not locked into any one broker. Of course, proven. I didn't really want to go down that road, cause conflict of interest and so on. But I have no problems. As long as it's arm's length and nobody feel it doesn't come across that is a preferential yield or whatever. So
Understandable.
we have good relationships with all the brokers, and so we're working with them to so we'll work with a few. We're not locked into to VM only, but so far it has been great with VM. We have a great relationship with everybody there, and the first REIT is going well. It's US $1 per share, and the minimum shares is 10,000 shares. So that's 10,000 US for by the way, it's a private placement, so I'm not.
Yeah, how do people get
publicly-
access?
Yeah, no, I'm not. This is not a public solicitation. This is just. I don't want FSD to. I don't want FSD to call me and cuss.
Okay.
But you're not allowed to. You're not allowed to.
We wouldn't want that either.
Yeah. You're not allowed to market private placements. This is just for information purposes. So forget that. Yeah. But yeah, So I think that the space is evolving. People want exposure to real estate, so they're very, very happy with the REIT model, and and then, as I say, for the property side, we are pounding the pavements, talking to the developers, trying to get them to come in at a price that can meet the market demands. We're telling them it don't make any sense, going out in and what I would call overbuilding, just trying to convince them. I mean, we tested the market with shell apartments. So Gary did a reel, not sure if you saw it, where he asked, would anybody be interested in buying a shell apartment? And like 50% of the apartments in China are sold as shells. So you do your own finishes and so on. And the response was massive. Everybody said, yeah, absolutely. I'll take my time and finish it myself, and I just want somewhere with a roof over my head, and I and get me started, and then I'll build out.
How much cheaper do you think a property becomes if you develop it that way?
Yeah, I think, we have the numbers, so we're coming with, at least two, because, two developers have come to us already, and we're finalizing the numbers with them. But, the key metric is coming in per square foot at like 200 US, 200 to 230, And just to give you some ballpark, right now the market is in the region of 350. So, 320, 350 US per square foot for the and it's better to use the per square foot price, because, as you know, size of units differ, so we try and encourage purchasers to understand the per square foot price as opposed to just the price. Because, one unit could be smaller than the other. And so that's why that unit is cheaper. So what you really want is to know the per square foot price and try and have an understanding of where you want to be per square foot in terms of your purchase price. So I think, we could, and if we come down to that level, you're definitely looking at picking up units, you know, 20, 25 million, for like an apartment,
In Kingston or
no, Kingston. Yeah, I know Kingston is the is the benchmark that everybody's kind of zoning in on, because that has gone up to 35, for a studio, so yeah, so you really want, that's where we're encouraging the developers to come in, and just leave out the finishes, just easy, just don't bother what I call overbuild, because nobody really can afford the prettiness, and if they can, they'll put it in themselves. So just get a product as a shell, at a price that the majority of the market can afford, and then give them the option to finish it. So those that can't afford it, they'll say, all right, give me that option, finish it for me. Or those that can't, will say, yo, leave it. Um, you know, I will do it or I'll beg my uncle for, do that for me, or what I'm saying. So, you know, so we're hoping, we as I said, we have two developers that we expect to give us the listings, and so we can come to you and make the case for you to, get um, get
Okay.
a unit. Yeah.
Yeah.
So that's
Is
the
it? Do
job.
you
That's
find
the
that?
job of your different agent, your different broker.
Okay.
We
Okay.
work for you to try and work pressure the developers to try and beat them down and give you a good price. So
Mm-hmm.
so everybody wins.
Okay.
Developer wins and you win. So my beat down proven phone right now.
Do you
And I
find
tell
that
them,
it's
I
a
know,
lot of first time home buyers that are
yeah, yeah.
buying like these shells? Okay.
Well, we haven't listed a shell as yet, but when we put the reel out,
Mm-hmm.
the response was, as expected, from a lot of first time home buyers, and who want to get in and just get a comfortable spot, and also a lot of the diaspora, specific and surprisingly, a lot of the British diaspora that just want them to say, yo, me just buy it and put it down and we're ready. You know? So I think it's a good space, and I hope the developers step into the space and and give us the listings so we can move them for them.
Okay. Yeah. So my question was, what do you see as the single biggest mistake that maybe first time real estate investors in Jamaica are making?
Well, I mean, you're not doing it. That's the biggest mistake. And I mean, in your lifetime you've witnessed properties doubling in value, at your young age. So you have to I mean, and some of that is our fault as the as the purveyors of opportunity. The capital market just hasn't, as I said, unitized it in an aggressive way to give you access. So now that you're getting that opportunity, you have to take it. you have to, you have to start, you know, buying into, the various REITs and building your portfolio in the same way you build your stock portfolio. You have to build your REIT portfolio. So, so let's go. Let's get this asset class going. And then, I think from the um the shelter issue, uh again, I think that, we have to represent for you and harass the developers and get them to build solutions that you can actually consume. So they have to be a little bit more creative. Whether they do adult dorms or shell apartments. Adult dorms are very, very popular globally in big cities. So there's so you're living in on a dorm where people work and live on, but it's obviously not 138 level. It's a little, it's a bit more, more finished and more, comfortable common areas, you know, um,
Just higher scale.
I mean, just a little bit more thought in the architecture. So it's not so much, a higher scale, but is a different design. So it's for because you're an adult, you're working, so you come home, you definitely want a hangout area, you know, um, pool tables, etc. And areas where you can just, play games or um, you know, be on your phone or your laptop, so what I would call the cafe kind of vibe, you know, um, and probably a kitchen, to allow you to, do some cooking and so on. And then, yeah, your room going to be a dorm room. That's the reality. Your room going to be, small and tight, but um, the common areas, you know, yeah, allow you to feel comfortable and be happy living, in an adult dorm. So get you out to your mother house, which is the big thing, and get you into Kingston and so on. So I think, I'd love to see the developers putting some inventory like that on the market. And as I said, shells, those are the two we kind of highlighted to them and asked them. We're talking to the mortgage companies, trying to get them to um, be as creative as possible with the financing structures to allow the um, payments to be more comfortable. So, we understand the assignment. The assignment is, put as much pressure on the stakeholders to allow the industry to keep growing. And so I want you, put as first time investors, I want you to wake up and go to bed at night, staying in touch with the market because it's an island. It's an island, and the island is very popular. That's just the reality. You are in Kingston, and Kingston, Jamaica is literally on the global map, and Montego Bay, and almost we have so many iconic cities, Portmore, um, Negril, so we definitely want to prioritize because we don't want to live anywhere else. And I mean, as you can see, you're not even getting the option to live anywhere else again. You know, those doors are closing.
Truly.
Those doors are closing on us. You know, we can't even, we can't even go nowhere, So, you have to prioritize, the land in Jamaica, land we love. When them say Jamaica, land we love, and the thing, the anthem, you have to appreciate that. And the
Yeah.
land you need for love. So make sure your real estate strategy is aggressive, and just have a good agent. Have a good agent that's gonna, help you to, find an opportunity, whether it be through a REIT, as as we're developing, or through a property.
All right.
Yeah. I mean, it sounds like you're very busy, Chris, because I can imagine this this market is different. It's not like selling stocks.
Right.
You're selling houses, so I can imagine you're very active.
I'm selling property. I'm not selling houses. Houses
Property.
is one.
Yeah,
Right.
that's
Houses
true.
is one.
True.
Yeah, and we're not just selling houses or property in Jamaica. We actually are applying for a license in Cayman as well. So we're doing Jamaica and Cayman. And we're not just selling to Jamaicans here. We have identified 8 target clusters globally, where people want property either in Jamaica or in Cayman. So it's a nice challenge for me personally, especially as I said, given the fact that this is my second career, having come out of hardcore, investment banking. Yeah, so I love it. I feel blessed to be able to take on this challenge, and build out a brand and in the real estate space, so no man, I'm in love. I don't even know the other, like a few nights ago, one of my mentees was asking me about some stocks and the multiples and the price, and I'm like, yo, when name so again? It's like, why? Why? I can't tell the last time I looked at a trade sheet. Yeah.
Yeah.
I can't tell the last time I looked at a trade sheet. I don't know. I don't know what bond prices are. I don't know. I don't know nothing. You understand? My
Yeah, man. Your
star, Jim.
focus is real estate.
Yeah, because my son is, your age. You guys know JP, and he manages the family portfolio. So it's not even like I even, have any, any need to do that. Him are the one I track all of them thing now, so.
Oh, interesting.
Well, if you ask me about real estate prices and what going in the different parts of Jamaica and Cayman, then yeah, we can answer that. But yeah, no, the investment banking days are. I mean, I still get the calls, from my former clients, asking me X, Y, and Z, but they're getting less because the truth is, as I said, I don't even know. I can't even help them because I'm not even up to date. So no man, we're locked in. We're locked
Does your
into
son update you on the performance of the fund?
it. He does. I'm not that stupid. I'm
Well,
not.
big up
I mean,
JP.
I am detached, but I'm not gone. Yes. So no, I and I do have access to the app, so at night I can pull it up and look for
Yeah.
the portfolio myself,
Hey.
Okay.
So yes, Matthew, may I go and watch it with a one eye,
Okay.
May I go and
Okay.
watch it with a one eye. So me not leave my entire life savings to him. You understand?
Mm-hmm.
Hell no.
Okay.
So, and definitely, and you know the young one to Zacho. So I mean, and him we don't even give him access to the app. You understand? We block him. You
Mm-hmm.
understand? So no man, I do that. But yeah, man, so I honestly, and I tell this to Gary, and when I tell it to him eye them open up wide. I think different can be bigger than proven. I think different can be bigger than proven because the real estate. I mean, obviously, in different metrics because this is not a balance sheet heavy business, our business,
Mm-hmm.
because we're just brokers. You know what I'm saying? So yeah, we don't need to have a 1 billion US, balance sheet. Um, but in terms of, how significant the demand for real estate in certainly in Jamaica is, it's massive. It's massive. Literally every one of our 8 clusters that we go, we're overwhelmed. Just from the diaspora alone, not even talking about mainstream America that want a villa in Jamaica, to get away and them second or third home. We don't even reach that market yet. Just in terms of the diaspora, and I guess Trump has helped, and all these different geopolitical challenges have helped, and so the diaspora just keep calling. They want to know, 'cause, they're having their own family meetings, and them say, boy, once the pit of them big, them out, them a go back to Jamaica, and and them done with this, and really. So I like it. I mean, so I guess if you wanted to look at it from the perspective of transaction volume as opposed to balance sheet size, I think it can be huge. Can be huge. Um, we're going to grow our agent count, and we're being very careful in how we do that. And then we have to grow the number of REITs, and just keep improving the REIT selection, the REIT structuring, etc., so that you guys get good exposure. So yeah, so we're working on that.
All
Okay.
right.
Well, I mean, cheers to that. Let's see how quickly you guys grow. But I mean,
Yeah.
I'm very much interested in the REITs. It's a more affordable way for me to get into real estate and get that exposure. So I'll definitely be keeping a key eye out for
Yeah,
those.
I'll send you the offer memorandum for the first one, so you can see. You know, I for sure, I think we're gonna do the next one as a public offering.
Mm-hmm.
Yeah,
Mm.
because the demand has been so great.
Yeah.
So we do it as
Yes,
a
man. You
public.
have to give the people them something, you know?
Yeah, 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 yeah.
Yeah, I want to see you guys list it. That's what
Yeah.
I'm more interested in.
Yeah, that would be
In
so
terms of
sick.
difference.
Yeah, well, no, the property you're talking about, like the property market
Oh, yes,
and
yes, yes,
listing
exactly.
funds
Yep.
and
Yes,
that.
yes,
When
yes.
that's built out.
Yes, yes, yes. We yes, it's so. Before we even talk about the listing, I want to get past the conversation with the JSE to get them to agree to the establishment of a property market, with different reporting metrics and so on, more reporting requirements and so on. Because as I said, when you take a look at the reporting requirements for the companies, you don't need that for a property company, which just has, a plaza, with, you know, 20 tenants, you know. So,
Yeah. I
you
think it
understand
would
what I'm
also
saying?
open up the market to a section of people that don't necessarily want to buy stocks but want to own real estate but can't really afford real estate. So this is a way to get that exposure. I think
Yeah.
it would be a good move.
But yeah, man, it's so they buy in on that basis. They have already
Mm-hmm.
said yes. But we are saying to them the reporting requirements when
Mm-hmm.
it's on the main market is too onerous just for a property holding
Yeah.
company. And when you take a look at London as an example and so on, they have a separate property market, So, and as you know, the US has various commodity markets. You understand me? So,
Yeah.
yeah, man, they have chopped up their markets into several sub segments. Um, so I think we just need to lobby a little bit more. We've spoken to the chairman and we've spoken to the CEO, and they're both open to having discussions. We've spoken to the FSC. So we're lobbying to have a property market.
Okay.
Do you think it could happen next year, 2027?
I think so. And it's definitely not difficult. So the
Mm-hmm.
reporting requirements are way easier. That's the point,
Mm-hmm.
So I think so. So, but yeah, I would be disappointed if we didn't get it done by next year.
All right.
Yeah, yeah. But that doesn't prevent us from doing the REITs. It's just
Mm-hmm.
that the REITs would not be listed on a specific property market, you know? So,
Understandable. Yeah.
yeah. So we'll
Okay.
continue to do them while we're lobbying for the specific property market.
Okay. Okay. Perfect. Anything you want to leave the people with, Chris? I mean, you've said a lot in terms of just exposing us to what REITs are, breaking down the real estate market. I mean, it's really, really good content, especially for our beginner investors and people like me that don't really know much about real estate. But is
Yeah.
there anything you want to just leave with the one investor here and there just listening?
Yeah, I want to, just go back to core. And going back to core, and as I said, I just had a session with one of my mentees about 2 nights ago. And, I was just reminding them that, listen, because, he was talking about, the fact that I'm starting this separate life, and um, that's something he would want to be able to do at my age and so on. And I said, boy, the truth, so okay, fine. So how do you ensure you get to that level? And he said, oh, and I want to go back to the core. And the core is, first of all, just living significantly below your means. That's the
Mm,
first thing, right? Because you have to uh, pay your future self first, right? Because remember, the entertainment or the activity or whatever, the trip or whatever that you are considering, at 25 to 35 pales in comparison to the trip that you're going to be considering 55 to 65. You know what I'm saying? Because trust me, you're gonna not even want, you're going to need that trip 55 to 65, and you're going to enjoy it way more. All right. So what you have, so you have to keep remembering that, and and when you remember that, what the action item is making sure that you're living significantly below your means. So that's one. And then, secondly, be a intrapreneur and an entrepreneur. Right? Now, the intrapreneur is killing it in whatever job you have, right? And being the best that you can be in your career. So whether it's BPO, whether it's medicine, whether it's law, engineer, accountant, whatever. But, you know, the fact that we took education so seriously as a society is a good thing, because it allows us to be an entrepreneur, to build a career. That's the first asset. So take that entrepreneurship extremely seriously and kill it. And then the second thing is be an entrepreneur. And the entrepreneur is reworded and recalled. Them have a new term for it now, and the new term is investor. You call it investor, me call it entrepreneurship. Because when you're sitting down listening to this podcast and you're listening to all the other podcasts and reading up and so on, you're not doing that just to trade stocks and that. Forget that. What you're doing is you're trying to build several businesses. You're trying to build the best bank in Jamaica. You're trying to build the best insurance company in Jamaica. You're trying to build the best food brand and distributor in Jamaica. And those are represented in stock participation. So you're looking at Grace Kennedy, you're understanding where Grace Kennedy is, you're listening to what Frank is saying, you're reading the thing and trying to see. Because if you had believed Don Webby and Douglas Arrain 15 years ago, if you were around, if you were around, and sensible at that time, because you guys are probably in prep school, but they said they were going to get revenues to over 100 million US. You were going to get 50% of their revenues from outside Jamaica.
I remember that too.
Yeah. And if you believe them at that time, you would be, even with the depression in the stock market over the last 5 years, you would be smiling right now. That's one. Two, if you believed Leachin when he landed in 2002 and that he would make NCB a force to be reckoned with again, and you picked up the stock at $2 when he came in, $2. So
Mhm.
so forget about the $200 that it was. Even at the depressed price now of 40, 45, 50, whatever it is now, you can't even calculate the return. It's incalculable. But you would have to make that decision not on your spreadsheets and multiple analysis and all of that. You'd make the spreadsheet as an entrepreneur. Because when entrepreneurs are making decisions, they're making decisions on business strategy. You guys are continuously trying to make decisions as number cruncher investors. Slow down, slow down. Don't get too intelligent on us, please. Just be an entrepreneur,
Mhm.
and focus on the business. and just say, NCB, brother, Sherry Martin get the work, Brother, I know Sherry Martin want to prove herself. You understand me? She have to find a way to do something. Whether she have a cut costs, she have come with a new product. You understand what I say? So forget the number crunching and the multiple and this, that, and all of the high science prettiness. But want to be entrepreneurs. Look at different businesses. Look at the petroleum. Look at Fesco. You think you would have beat off a Fesco because you run numbers? No, you would have beat off a Fesco because when you sit down with Jeremy and the whole of them man they're trying to make money. Them man don't run no spreadsheets and all and think the way you are run. Them man they try to sell some gas. You understand me? So them man a drive up and down and look for gas station to put up. You understand me? So ride with the entrepreneurs and be a partner. Be a partner. Look at the business model and just don't follow America. Can't like to jump on CNBC and follow America with all kind of multiple and stock price. I'm saying to you, let's get back to fundamentals. Be an entrepreneur, kill it in your career, get to superstardom, and be an entrepreneur. And it's easy to be an entrepreneur now in Jamaica because you have access to so many partners. So look at the partners. Read up on them, study them, understand what they're going to do. Go to AGM, ask questions, dig into the thing, and partner with them. And you won't regret it. May I tell you? Nobody come ask me about the price, this and price, that, and no, me I think, and I say, me know that businessman. It's them first command there, them man they don't sleep. Them new guy, what you call it, Regency or something like that, petroleum guy, them man they don't sleep. Them man they do gas station every day.
Mm-hmm.
That man that you want to partner with. So me and my son, I come to me about numbers and all. I say, no, I don't want to look on the numbers. We know the brother there. The brother there now. He might drive up and down the whole of Jamaica and look gas station. Buy some shares and just relax. I don't want you not about a multiple and all them thing. Just focus on the entrepreneurs and see yourself as a partner with them. See yourself as a partner. All right, and just be an entrepreneur, and your business is you partnering with Leachin, you're partnering with Chris Locker, you're partnering with whatever his name is at the petrol, you're partnering with German bonds at Fesco. You have some good partners out there, some really good entrepreneurs out there, leading businesses. Study them and partner with them. Stop panic over these different stock price movements and all of them. Lucky on streets. That's what me I said to him.
Oh, wise words,
All
man.
right.
Wise words. All right. Well, Chris, thank you so much again for coming on the show. I really appreciate the amount of time you give us, because I know your time is money. So yeah, and I think for all our listeners, there's so many things in this conversation that we should take away from what Chris has said. I know we don't talk a lot about real estate, so this is very much insightful. Share this episode.
Man, I'd love to, come on, maybe with even Gary in the future, and we're going to be giving you the statistics and showing you, what's happening, where, and the specific movements and so on. So, no, man, I love it. I think the market is virgin, and I was deputy chairman of the Jamaica Stock Exchange 20 years ago. And I was the chairman of the subcommittee for the junior market, for the establishment of the junior market. So I told Gary I'm used to, being in situations where it just a start, you know what I'm saying, and that's the beauty of growing up in a developing economy. You know, you get exposed to virgin industries, and that's just it's exciting, and I love it. You know, and
Hey.
yeah, man. And speaking of virgin industries, basketball,
Mm-hmm.
basketball. Everybody, I'm leaving you with this.
Mm-hmm.
Get yourselves ready. We're gonna have the National Basketball League in the summer, and it's going to be epic. So get yourselves ready to be entertained with our amazing basketballers in Jamaica and some special guests that will be rolling in to, 'cause you know, Jamaica is Jamaica. So all of the basketballers are already, the global basketballers, specifically in the United States, are already reaching out to say, you know, how can they help to grow the league. So it's going to be nice. It's going to be nice. You know, it's going to be
All
real fun.
right.
Yeah, man.
Yeah, man, that sounds exciting. Looking forward to it. Looking forward to it. Thank you again, Chris, for coming on. Guys, if you like this episode, please, like. We'd appreciate if you also subscribe and comment below. Like, let Chris know your thoughts. And yeah, like always, guys, stay limitless.
Peace.